Hey, what's up everybody? It's Brandon Stevens, Premier Homes Northwest, eXp Realty. I'm back again this week. I got an awesome video for you. We got a new year, it's 2023, and today we are talking about what's going to happen in the real estate market in 2023. I'm sure you're wondering, so let's get into it. All right, before we get into the video, I just wanted to remind everybody I am a licensed real estate agent right here in the Olympia-Lacey-Tumwater area. We're going to cover today what's going on with the 2023 real estate market. But first, can you please subscribe to my channel, hit the notification button, follow us on Instagram, TikTok, Facebook. We're on all the platforms. I'm excited to share this video with you this week. We got lots of things to cover. It's not going to be a super long video, but it is going to be super informational because we're going to talk about what the experts are saying about 2023. Remember, the key to 2023, I know you're going to hear it over and over and over again, but it's going to be all about inflation. And where inflation goes, so does the housing market likely. With that being said, if you're thinking about buying or selling a home soon, you probably want to know what you can expect from the housing market this year. Well, in 2022, the housing market underwent a major shift as economic uncertainty and higher mortgage rates reduced buyer demand. This slowed the pace of home sales and it moderated home prices. But what's going on with 2023? I get a lot of questions. So we're going to talk about what the experts are saying right now. An article from Housing Wire offers this perspective. The red-hot housing market of the past 2.5 years was characterized by sub 3% mortgage rates, fast-paced bidding wars, record low inventory, but more recently, market conditions have done an about face. Now this is the opportunity for everyone to become re-educated about what a typical housing market looks like. This year, experts agree we may see a return of greater stability and predictability in the housing market. And quite frankly, I think that's what we all would really like. And if inflation continues to ease and mortgage rates stabilize, here's what the National Association of Realtors has to say about the 2023 forecast. While 2022 may be remembered as a year of housing volatility, 2023 will likely become a year of long lost normalcy. Thank you. Returning to the market, mortgage rates are expected to stabilize while home sales and prices moderate after recent crazy highs. That's Danielle Hell, chief economist at Realtor.com. She adds, buyers will not face the extreme competition that was commonplace over the past 2 years. Lawrence Yun, chief economist at the National Association of Realtors, also explains home prices will vary by local area, but the net neutral nationwide as the market continues to adjust. Says, after a big boom over the past 2 years, there will essentially be no change nationally. Half of the country may experience small price gains, while the other half may see slight market declines. Mark Fleming, chief economist at First American, says the housing market, once adjusted to the new normal of higher mortgage rates, will benefit from continued strong demographic-driven demand relative to an overall long-run shortage of supply. So I can guarantee you that houses are still selling. Despite what the media says, the market is not crashing, but you are going to need to do a few things differently as a seller in this market. The real key to this market right now that you're in, it's vastly different from the market of 2022, 2021, and 2020, is that you have to do some things differently. Your house just isn't going to sell by just putting it on the market. Number one, you got to price your house right. The housing market obviously shifted in 2022 as the rates climbed. And as a seller, you got to recognize that things are different now and you have to price your house appropriately. If you price your house too high, you run the risk of deterring buyers. And if you price it too low, well, you're probably leaving money on the table. The second thing you need to do is keep your emotions in check. Since 1985, the average time a homeowner has owned their home increased from 5 to 10 years. The side effect of that is if you stay in a place for too long, you get emotionally attached to that space. For some homeowners, that makes it even harder to negotiate and separate emotional value from actual market value. The third thing you can do is stage your house properly. So while you may love your design, your decor, you have to recognize that not all buyers are going to feel the same way about your design. No longer can you just put your house out there and get 5-10 bids on it. And that's why it's so important to make sure you focus on your home's first impression so it appeals to as many buyers as possible. Buyers want to envision themselves in a space that can truly feel like it can be their own. All right, we talked about what sellers need to do in 2023 to get top dollar for their house, but what does that mean for the buyers? Well, let's talk about that. Higher interest rates have definitely caused a shift in the market, and gone are the days of the 3% interest rates. But what if I told you right now may actually be the best time in the next 5 years to buy a house if it's viable for you? It all comes down to this. You may have more negotiation power right now than any time in the last several years, or more than likely in the future as well. So here are two trends that may be the news you need to jump right into the market. First, we got the return of contingencies. The last 2 years, more buyers were just willing to skip important steps in the home buying process. They'd waive appraisals, waive inspections, put extra money down, bid way over asking price in a bidding war. But now things are different. The days of feeling like you need to just waive all these contingencies or pay drastically over the asking price, well, they may have come to a close. The second thing is sellers are more willing to help with closing costs or a rate buy down. So this is really important because this is going to help you put less money out of pocket. A Realtor.com survey showed that 32% of sellers paid some or all of their buyers' closing costs in the last 12 months. This may be a negotiation tool you'll see as you go to purchase a home. Probably thinking as a buyer, if I buy now, will I end up with negative equity? And home equity has been a hot topic, and you may have heard there's a growing number of homeowners that got negative equity. But don't let the headlines scare you, because in truth, the headlines don't give you all the information you need. See, headlines are focusing on short-term equity numbers, and they fail to convey a long-term view. We all know that underwater refers to a scenario where the homeowner owes more on a loan than the house is worth. This was a huge issue when the housing market crashed in 2008, but it's much less significant today. In 2022, home price appreciation definitely soared. It reached its max around March or April. Since then, the rate of appreciation has been slowing down. Good for home buyers. Homeowners who bought their house last year right at the peak though, or who paid more than market value in those months that followed, are more than likely to fall into the category of being marginally underwater. Qualifier marginally is another key piece of the puzzle the media isn't necessarily including in their coverage. It's important to remember, for most, owning a home is a long-term investment, not a short-term play. So when headlines focus on the short-term view, they're not necessarily providing the full context. And typically speaking, the longer you stay in your home, the more equity you gain, as well as most experts are predicting an average equity gain of over 20% in the next 5 years. Although the housing market cooled, if you're a homeowner, your net worth got a big boost over the past few years. So equity is the current value of your home minus what you owe on the loan. Because there was such a significant imbalance between the number of homes for sale and the number of buyers looking to make a purchase over the past few years, home prices appreciated substantially. While certainly home price appreciation has moderated and even depreciated in some markets, that doesn't mean you've lost all the equity you gained. The latest data from CoreLogic finds the average equity has actually grown by $20,000 over the past 12 months. So while the gains aren't as dramatic as they were, they're still significant. While equity helps you increase your overall net worth, it can also help you achieve your other goals, like buying your next home. So when you sell your home, your current house, the equity you built into it comes back to you in the sale. While equity helps increase your overall net worth, it can also help you achieve other goals, like buying your next home. So when you sell your current house, the equity you built up into your current house goes back to you at the sale. And this may be just what you need to cover a large portion, if not all, of the down payment on your next home. So if you've been holding off on selling because you weren't sure what the headlines meant for your bottom line, you can rest assured you've still gained equity in the recent years, and it can help fuel your move. All right, so there you have it. Little nuggets for 2023 moving forward in the real estate market right here in Olympia, Washington. We covered what sellers can expect. We covered what buyers can expect. I'd love to get with you. If you have any more questions, call me on the phone. I'm the one that answers. You can text, shoot me an email, hit me up on Instagram, on Facebook, on YouTube. Follow the description. We got links in there. You can go straight to our website, search homes, or you can just reach out to us via contact form. Again, I think 2023, we're going to see some stability in the market, which I think is really good for everybody, buyers and sellers. No one likes it crazy one way or the other. I don't think we're quite at a neutral market yet, because at the end of the day, it's just economics. It's supply and demand, and unfortunately, we still lack supply, and I don't see that changing anytime soon. I look forward to seeing you on the next one. Again, I'd just love to talk to you. Feel free to reach out anytime.